Hey everyone, welcome back to Corporate Decoder. Today, Davis New York Venture Fund Inc. FINANCIALS just filed their semi-annual report, and I am seeing a mixed bag of performance compared to their index. Quick note, this is not financial advice, just my take on public filings for educational purposes. The funds are showing some serious underperformance against their market benchmarks, but have some strong individual stock picks. Let's dive into the Davis Global Fund data. For the 6 months ended the 30th of April 2026, the fund experienced a net investment income of over $2.3 million. However, their net realized gains from investments and foreign currency transactions were a much more substantial $114 million. Looking at the financial highlights for Davis Global Fund class, a share's the net asset value per S-share at the beginning of the period was $34.41. For the 6 months ended the 30th of April 2026, the total return was 3.31%. This is quite a bit lower than their benchmark, the MSCI ACWI, which returned 7.75% in the same period. This suggests the fund is not keeping pace with the broader market. For the Class C shares of the Davis Global Fund, the total return for the same period was 2.87%, again underperforming the MSCI ACWI. Historically, Class C shares often have higher expense ratios due to contingent deferred sales charges, which can impact returns. The Class Y shares of the Davis Global Fund performed slightly better with a total return of 3.43%, but still lagged the MSCI ACWI. Class Y shares typically have lower expense ratios, so it is interesting to see the gap in performance persist. Now let's switch gears to the Davis International Fund. For the 6 months ended the 30th of April 2026, this fund also had a net investment income coming in at just under $1.4 million. Net realized gains from investments were around $16 million. For the Davis International Fund class of shares, the total return for the period was 0.96%. This is a stark contrast to its benchmark, the MSCI ACWI X USA, which returned a very strong 12.11%. This shows a significant underperformance in international markets. Class C shares of the Davis International Fund saw a total return of 0.59%. This again falls far short of the MSCI ACWI ex-USA benchmark, highlighting the challenges the fund faced in international markets during this period. The Class Y shares of the Davis International Fund had a total return of 1.18%, still significantly underperforming its benchmark. This consistent underperformance across share classes is a key takeaway here. Digging into fund expenses, we see that for both the Davis Global Fund and the Davis International Fund, the total advisory fees paid for the period were $2.5 million, and just over $700,000 respectively. These fees are a consistent cost impacting investor returns. As of the 30th of April 2026, the Davis Global Fund held 40 portfolio positions, while the Davis International Fund held 33. This suggests a relatively concentrated portfolio for both funds. Concentrated portfolios can lead to higher volatility. The portfolio turnover rate for both funds was 20% and 18% respectively. This indicates a moderate level of trading activity. A lower turnover rate generally suggests a more buy and hold strategy, which can be more tax efficient. Looking at the schedule of investments, the Davis Global Fund has a significant holding in Alphabet Inc., Class C, valued at over $30 million. This is a common tech giant and a strong performer in the communication services sector. Another notable holding for the Davis Global Fund is Sea Limited, an ADR from Singapore valued at over $30 million. Sea Limited has been a volatile stock and represents a substantial part of the fund's consumer discretionary allocation. In the Davis International Fund's portfolio, Samsung Electronics Company Limited stands out as a large holding valued at nearly $20 million. Samsung is a dominant player in the technology hardware and equipment sector, particularly in semiconductors and consumer electronics. The Davis International Fund also holds a significant position in Ping An Insurance, a major Chinese financial services company. This holding, valued at over $17 million, reflects the fund's exposure to emerging markets and the financial sector in China. The management discussions highlight that both funds underperformed their respective benchmarks. For the period ending the 30th of April 2026, the Davis Global Fund cited detractors from performance, including industrials and consumer discretionary sectors where the fund was overweight. Strong performers like information technology and healthcare contributed positively. For the Davis International Fund, detractors included consumer discretionary and industrials, while information technology and financials were contributors. The report explains that while the market saw strong gains in energy, materials, and industrials, the international fund was underweight in these areas. Looking at the statements of changes in net assets, Davis Global Fund's net assets decreased from over $938 million at the beginning of the period to over $910 million at the end. This decrease is largely due to distributions to shareholders and capital share transactions despite positive results from operations. The Davis International Fund, on the other hand, saw its net assets increase from about $199 million to over $260 million. This growth is primarily driven by significant net increases resulting from capital share transactions, offsetting the negative impact of distributions and operational results. The directors' approval of advisory agreements is a crucial part of these filings. The independent directors reviewed the performance, fees, and services provided by Davis advisors. They noted that the Davis Global Fund class of shares outperformed its benchmark since inception, but underperformed over shorter periods like 1, 3, 5, and 10 years. Conversely, Class Y shares outperformed Lipper averages over most periods. For the Davis International Fund, the independent directors noted underperformance across most periods against its benchmark and Lipper averages. However, they observed that the management fees and total expense ratios for Class Y shares were reasonable and well below the median when compared to other similar funds. The funds are clearly facing headwinds in trying to keep pace with their benchmarks. While they have some strong individual stock picks like Alphabet and Samsung, their overall allocation and sector bets seem to be hindering performance. The difference in net asset growth between the global and international funds is also quite striking, with the international fund showing significant growth from share transactions. From a shareholder perspective, while advisory fees are being managed and even capped in some cases, the core performance is the main concern. The fact that both funds are lagging their benchmarks suggests a potential strategic misstep or simply challenging market conditions that the fund managers have not navigated effectively. The risk I am watching is whether this persistent underperformance will lead to significant outflows. What I am actually looking for is a clearer strategy to capture gains in the sectors the funds are underweight in. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, and subscribe for more. Join us on Discord linked below.